We're going to have tokenization of equities, tokenization of bonds, tokenizations of CDOs, tokenizations of other assets. Crypto's here. I don't think I would have gone in full-time as an industry if it was just Bitcoin. What's really interesting about the rest of crypto, these decentralized platforms, which we haven't seen work yet, to be honest, right? They're close. Now they're fast enough and safe enough, and now we're going to have regulation that allows them, is that the ability to have peer-to-peer transfer of value. And so you're going to see it in ticketing, you're going to see it in social media, you're going to see it in finance, lending, this idea of decentralized stuff. It's been in a sandbox till now, and it's about to move out of the sandbox and into the real world.
It's unbelievable that, Jerome Powell is just sitting around waiting. The president calls him too late. He's just too late, Powell. I mean, why hasn't he cut? I mean, you remember, if he cut interest rates 1%, and you've got Europe cutting like crazy, you realize that saves America $300 billion a year? It's unbelievable how much we would save if he did his job and he cut interest rates. The economy is ready for it. It's easy. Inflation is low. Come on. He's got to do his job soon.
Crypto, more broadly, is ultimately going to have a benefit to the dollar long term or undermines the dollar? And given that I don't think you're an American, you may not have a stake in this argument.
Well, I have a stake in the interest of stability for all the emerging markets where we operate, right? So definitely I know that there are concerns on the increase of debt of the United States, but think about the fact that the United States are by far still the safest country when it comes to, their national currency and your national currency. Right. So if you compare, everything is relative in life. Think about Argentina, think about Brazil or Turkey and Vietnam and so on, and Nigeria. So by far, the US dollar is the safest fiat currency in the world. And I think that stable coins that were born through crypto are the living proof that actually a combination between Bitcoin, I would not say crypto in general. I love Bitcoin. I think that Bitcoin is completely different than crypto and the rest of crypto. So between Bitcoin and stable coins, they will make America stronger. And that, I think, is the main point of this administration. With stablecoins, we are bringing the US dollar to 420 million people around emerging markets, developing countries, and at an unprecedented pace. We grow by 30 million new wallets per quarter. We are the biggest factor in the expansion of the US dollar hegemony. So that is something very important, apart from buying back the US Treasury. And by the way, Tether invested in the last 3 years back around $5 billion in the US. So we are, I think, one of the biggest promoters of the United States and the United States dollar. Plus, on top of that, we use Bitcoin as a way to create a stronger savings account for and explain how that could be beneficial also for Americans. In the end, it's like Bitcoin is the new gold and is understood by people as an edge. I'm not saying that you should have 100% of your portfolio maybe in Bitcoin, but definitely is a good option to have in your portfolio.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Mike Novogratz says it's time to tokenize the globe. And with the regulation right around the corner, we know it's about to get done quickly. We've already had Trump pushing the stablecoin bill because he knows the stablecoin bill is just like 1913. It's going to change everyone's lives forever. And unfortunately, the sheep have no clue. And remember, the Crypto Teacher told you. And we have Lucknick on Jerome Powell not cutting. And we know this is a plan that moves in phases. He's keeping rates higher for longer to destroy this legacy market so the fourth industrial revolution can rise. And we know Lucknick is invested in Tether. And we always hear the Tether CEO speaking of the emerging markets. And we know China and that digital yuan are going to eventually take over the emerging markets, replacing Tether. And remember, the Crypto Teacher told you. And we have the CNBC guest, Drew Mattis, giving us the truth. Yes, the jobs market was awful, but what did the media do? They spin it. And if you don't understand finances, you'll fall for it. And consumers are feeling the pain worse than 2008. And more layoffs are definitely coming. And we see workers are definitely aware of it. On the internet, you have more and more little social media boards letting you know the layoffs are happening in different corporations. So the people are definitely aware. And we have the dollar pulling back off the highs, but it still has a long way down. And remember, we're going to a level playing field. Now, this Trump spending bill is definitely going to give certain parts of the market a pump. The same way we saw AI, these 7 stocks get all the money. When this bill gets passed, certain stocks are going to get a pump, but not the whole market. But this new digital economy is definitely getting a pump, and we know defense stocks always get a pump. But when it comes to the United States dollar, the foreign investors are running away. The only people that are buying are the central banks. But on the flip side, they're buying up gold to hedge their own self. You can't make this stuff up. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Drew, what about what we got from Fed Chair Powell, which I thought was a little bit on the hawkish side, especially if you compare it with what Governor Waller said this morning on CNBC, that he's ready to see rate cuts starting in July. How does it impact your forecast?
Well, I mean, so what we got out of Powell is what we're expecting, and we're expecting 2 rate cuts this year. The Fed can't rush into this, right? The problem is that they're well positioned to wait means they're actually stuck, right? They're putting a good spin on it, but the reality of it is if they cut rates and long-term yields move higher, right, then they're in a really bad situation, and it'll be very difficult for them to get out of. And so the risk mitigating strategy for them is to stall for time and hope that the data actually softens enough that they can get away with rate cuts without boosting inflation expectations.
Drew, what kind of odds do you place on the long end not reacting well to action cutting at the short end?
Well, I think if they were to do it now, there's enough people in the market who think that the economy is doing okay, or who have spun things to look like they're doing okay. If you looked at Friday's payroll report, or last Friday, early month payroll report, it was not a good report. But everyone spun it as if it was like this well-expected, decent report. There was a net 40,000 jobs added, and if the participation rate hadn't declined, we'd be at a 4.5% unemployment rate. But that was spun by market participants who want to be optimistic as being a kind of inline report or something that was good, when in reality it was actually quite poor. The problem with a lot of what's been going on in Washington is that it impacts the data in ways that can initially make the data look much stronger, and I think we've been seeing that. But when you ask consumers how they're feeling, if you look at the University of Michigan, the average sentiment reading over the last couple of months versus 2008, they're pretty much identical. So consumers are effectively telling you things are as bad today as they were in 2008, and the market's just shrugging it off. I think that's a mistake. When people are feeling that much pressure on their own personal finances, you have to worry about it.
So politicized, though. If you break it down by which party you're from or identify as, I mean, it's mostly Democrats that are pessimistic, and also I would argue, Drew, that the sentiment has rebounded since some of those poor levels.
They've rebounded from really bad levels to bad levels, but I would submit to you that it's more likely that they're talking to their admin, or their admin's ignoring them because they know that person's not going to be there for 3 months, in a month or two, and they don't want to have an awkward conversation because they're privy to everything. And so people feel like they're going to get laid off well before they actually do get laid off, and I think we're beginning to see that in the data. And we'll see that in consumption, and we'll see that in a boost in personal savings, which actually has been rising pretty quickly.
It's just a scratch. So you're saying you're calling it just a scratch like Elon Musk. So it's actually down more than 9%. But I want to get to the action this week in particular. So I think a lot of people are saying people are piling into the dollar as a safe haven, but you're saying it's something a bit different. You're saying it's some short covering and just also a bear market bounce.
Yeah, I mean, technically, essentially, it peaked on January 1st at 110 and then February 3rd at 109.75. Since then, it's just been a series of lower highs and lower lows. Simply put, the dollar index is in a bear market. Technically, where would this market need to turn around in order to get a neutral trend? Really, it's got to get over about 99.36. We'd probably run into 100, but I anticipate traders would press the downside under the premise that the bounce is just a bounce in a bear market. You know, since the beginning of the year, it's the political uncertainty, the tariff headlines, and also speculation that U.S. authorities really are quietly favoring a weaker currency. So it's fueling a rotation. And you look at the currency, the composition of foreign exchange reserves. This is put out by the IMF quarterly. The dollar in 2001 made up about 71% of most central banks, foreign central banks, currency reserves. If you bring that back to 2025, it's quietly drifted lower to about 57%, followed by the euro, the yen, and the pound. It's been the world's reserve currency for about 80 years. So the reason for the rotation, they're taking down this, and that's where selling dollars is taking place, is the U.S. fiscal trajectory is just unsustainable. It's most likely solvable, so default risk is relatively low. And where are these central banks rotating? Well, they're obviously adding gold, they're adding other asset classes, and it's brought together that way.
Let me ask you a quick question, then we got to go. A lot of talk about the big beautiful bill and some of the implications it has on not only the deficit but also tax policy here in the U.S. How does that impact the dollar very quickly?
Well, the problem is that the Federal Reserve doesn't know what's going to happen. So they're looking at these different spending measures and things like that, and they've got to hold higher rates for longer because of the fact we've got this geopolitical uncertainty and the tariffs. So you're going to see it held back by that uncertainty until we get clarity on this big, beautiful bill, Middle East conflict, and also tariffs. Then the dollar index can resume its rally.
Told me watch what they do, not necessarily what they say. So we have had the Treasury Secretary, Scott Bessent, out talking about the administration's strong dollar policy, as they've had for many decades now. But the next question is, do traders, do investors really believe that? And the answer so far seems to be not so much. For one thing, Trump before on the campaign trail last year, he told Business Week, he told, he said it several times, they argued that a weaker dollar is more beneficial for American manufacturing. It's something he talked a lot about in the first administration as well. So I think traders and investors are sort of, they're hearing one thing, but really they're assuming another.
I mean, there are upsides to a weaker dollar as well, at least in the near term. Is it perhaps the case that the administration might be allowing the dollar to be weak, but at some point won't be happy with that anymore?
Sure, yeah, I think that's the exact question. And that's a really difficult point to say at which point does this become dangerous. We know folks are talking about it as we sort of wrote. I think one thing that has sort of caught people's attention this year has been the speed of the movement. Whether, depending on what gauge you look at, if you look at Bloomberg's dollar spot index, this is the worst start to a year ever since the index launched 20 years ago. So there's no doubt that people see the merits, or some people see the merits of a weaker dollar. I think the question is how fast and at what cost, and where does it sort of end?
What are traders saying? Are they, reticent to try and take advantage of this right now, or are they still piling out of the US dollar and into other currencies that maybe offer more favorable carry, or whose treasury markets are perhaps not so fragile and yippy?
Absolutely. That seems to be the case right now. We've still seen a strong demand for carry, as you said. Maybe that's emerging markets, maybe that's Latin American currencies. Maybe it's Europe, where we've seen plenty of their own sort of fiscal developments and political developments this year as well. But I think one interesting thing to watch is, so far this year, a lot of this has been the fast money. This has been the hedge funds, the CTAs, and that's important. But I think what we're all really watching for now is, will pension funds, will sovereign wealth funds, will the real slow-moving sort of money that moves like an aircraft carrier, very slowly but very impactfully, will that start to move? And that's sort of at the point we're at now.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.